The 34th BMO Metals, Mining and Critical Minerals Conference is going on right now in Hollywood, Florida. Our next guest is there, and one of the minerals he's looking at is potash. The potash market, of course, stands to be affected by negotiations on the Ukraine war, developments in Belarus, and by trade tariffs threatened by the White House towards Canada. Joining us to talk about all of this and the outlook for potash and other critical minerals is BMO analyst Joel Jackson. Joel, thanks a lot for joining us. Why don't we begin with potash, the war in Ukraine, and developments in Belarus, which is a major potash producer. Tell us what's going on in that part of the world and how it could affect the potash market.
Good afternoon. I think it's a very good potash market. We've seen prices rise about 20% the last 6 months. Inventories are tight in China. We're seeing actually a lot of maintenance problems in Belarus and Russia that are restricting supply this year. It's a good market for potash right now. And yeah, there's definitely a hope from President Lukashenko of Belarus that if he can release enough political prisoners, maybe he can get some sanctions dropped against them, and Belarus can ship potash again out of the EU instead of out of Russia. It won't add more volume out of Belarus, but it could reduce their costs. But their market's so strong right now and prices are so good, I don't think it's going to affect potash prices in the short term.
What is potash trading for right now?
So let's say in Brazil right now, you can a ton of potash going for $325, $330 a ton, CFR Brazil. That's up from about $280 maybe in the fall.
So, of course, in this country, we are significant potash producers. We have Nutrien as a major, the world's largest potash producer. What does this mean to Nutrien?
Look, for Nutrien Mosaic, right, the big Saskatchewan producers, this is great. They're seeing potash prices rise. They're able to sell more product. And, you know, there's hope here that prices have been rising about $10 a month. If that can keep going, I mean, it's going to be really strong for margins. It's going to let these companies be able to buy back more stock, up the dividend. It would be great.
Farmers choose when to buy fertilizer and lay it down in their fields. Do high prices discourage farmers from making that decision?
No, I mean, really, a mid-cycle potash price is something like $350, $400 a ton. We're at $325, $330, right? It's not $1,000. So really, it's a marginal difference in cost for a farmer.
And what about trade tariffs from the U.S. imposed on Canada? Do you have a sense of what the tariff would be? There's no carve-out for fertilizer. There appears to be a carve-out for oil and gas from Canada shipped into the United States. That appears to be the plan of the Trump administration. How do you assume that potash would get hit with a full 25% tariff if it lands? And what would that do to sales of Nutrien's potash into the U.S.?
Tariffs are a big topic of discussion at this BMO conference, mining conference for sure. Most companies across different commodities that are saying it's not going to really matter for potash specifically. If potash is $300 a ton, you're slapping on a $75 a ton tariff, that will be passed to farmers in the States. The U.S. is basically needing Canada for 80% of its potash needs. So, but I think those prices will get absorbed by the farmer. It's not going to be a huge per acre difference in cost, but you know, it is going to have to be passed through. The other sources of potash are, you mentioned Russia, Belarus. It's not like there's other great options to replace Canada.
You think farmers will pay those higher prices rather than skip a year and buy their potash next year?
Well, they skipped a year one time in the last 3 or 4 years because prices were as high as $800, $900 a ton, you know, a few years ago. So we're actually below kind of trend demand. So, you know, I don't think it's going to be, it's a marginal increase in their costs. I mean, there's other concerns too, right? Tariffs will increase your pesticide costs, increase, you may have issues with farm equipment like tractors as well. But potash, a difference in $75 a ton for potash, when $375 potash, that's still about a mid-cycle price. It's nothing crazy they haven't seen before.
Okay, part of the name of the conference is critical minerals, and that brings to mind those minerals that are key to the decarbonization of global economies and to the build-out of of electrification, electric vehicles. Lithium, what kind of conversations are going on about lithium or other related critical minerals?
Right, we cover a lot of lithium stocks. We have talked to tons of different lithium companies the last couple of days. The sentiment is bearish. We've seen lithium prices in the doldrums for a few years. Price has been flat around $10,000 a ton for 6 months. There is really no hope at this point that lithium prices are going to materially recover this year. Okay, the sentiment is bad among the industry and investors. However, there are some hopes for 26. You are seeing much more demand for ESS, that's stationary storage, Okay, so there's hopes that that could improve demand into 2026. That offset a lot of supply. Demand's okay with EVs and stationary storage. It's been too much supply. There's a hope things get better for 26. You might see prices recover. You know, projects are really having a lot of trouble to get funding. We're going to see projects not get funded. We are going to see things recover over the next few years, but it might not be in 2026.
BMO analyst Joel Jackson in Hollywood, Florida. Joel, thanks a lot for your insight, valuable insight on potash and lithium.